Alright, hello everyone. Here's our video for AMD versus Power 3. You guys see I have a little bit of a different format than I normally do. So please let me know in the comment section, what you guys think. Should I keep it like this? Should I go back to the Notion template or whatnot? So please let me know. Essentially, the goal of this video is dissecting the difference between AMD, while that is more pattern based, and Power 3, which is more time-based. So, we're going to first begin with understanding AMD. What is AMD? AMD, as taught, is accumulation, manipulation, distribution. A, accumulation, M, manipulation, D, distribution. AMD is essentially a program that runs within the algorithm to manipulate and engineer liquidity. It's essentially was designed with the intent to play with human emotion. Its goal is to manipulate human behavior within the algorithmic logic. And as it is written, the program consists of 3 different phases. Talking about when we manipulate human behavior, it is essentially enticing buyers and sellers into the market. Because ultimately, as we know, 99% of shares fail. So the goal of the algorithm is to steal our money. Excuse the typo. So, accumulation. In this stage, in this phase, price starts with a consolidation. Price is accumulating buy stops above and below the market. As seen here, price consolidates, accumulating buy stops at the highs and sell stops at the lows. Following the accumulation, we are going to see manipulation. In this phase, we're going to underline the bullish market, which is going to be the ultimate example for today in both the AMD and Power 3 video. Following the accumulation, price will manipulate an underlying bullish market beneath the sell stops. We're going to rate the sell stops. During this stage, we are pairing those sell stops. This is what smart money is doing. Smart money is pairing the sell stops with buy orders, with buy positions. And within this stage, this is where smart money is essentially loading up orders. Following the manipulation, we are looking for distribution. And this, following the manipulation, market reverses, expands higher, and then triggers the buy stops above the accumulation here, which now become new orders. As we know, when buy stops are filled, when price is going higher, that triggers a buy position. So we have our consolidation, expansion, reversal, expansion. So, as we just showed, that was an underlyingly bullish market. And that's, again, going to be the only examples for today. So now, let's imagine that there's a clear drawn liquidity higher, being a whole old high, a higher time frame SIBI, so a higher time frame for value gap. The price is reaching to, potentially to ultimately go lower or just to run higher. Before reaching that drawn liquidity, price is going to accumulate positions. Following that, manipulation, and that's what we just showed. However, we need to understand when the manipulation will end. So we're going to be looking at the left side of the market. What has already happened? So we're going to be looking at old PD rays, old market structure that was formed. So as I was talking about, our drawn liquidity being the old high / a higher time frame for value gap. However, when we're referencing the manipulation, the end of the manipulation, we're looking at previous structure from the left side of the market. What has price already formed? So, following the accumulation, price is going to manipulate down into a often higher time frame PD ray, which is often going to be a for value gap, a breaker block, an order block, mitigation block, etc. That could also be an old low, old swing low, and so on. Essentially from there, we're looking for market to reverse and offload those long positions to willing buyers above the drawn liquidity. Following that, again, as talked about many times in our previous videos, everything is fractal. Everything in the market is very fractal, especially AMD. We can see this on all time frames. And when understanding AMD, it is simply a pattern that forms. So understand that there's only a certain number of ways that the algorithm, the market, can engineer liquidity. AMD Power 3 is essentially one of the main ways that the market is going to engineer liquidity and reach our drawn liquidity. And now back to the fractal viewpoint. Within each of these retracements, so let's imagine this is our, so these are the larger lines. Let's imagine that's our 15-minute time frame. So this is our 15-minute time frame. Within the distribution phase, we're going to be looking for the exact same AMD setups. So once price on the higher time frame accumulates, manipulates, and then we see our smart money reversal, and then we're in the distribution phase. On our way to our drawn liquidity being up here, within each of these lower time frame or higher time frame retracements, we're essentially going to see the exact same setup form. So we see our higher time frame AMD. Within each of these retracements, we're going to see often, not always, a lower time frame AMD. And this is not going to just form at random times. This is kind of starting to dig into the Power 3 aspect, but again, I'll show more examples with Power 3 later. But essentially, we're going to see these patterns form at significant times, such as 8:30, often 9:30. I should have probably had 8:30, 9:30 as an example, but let's recall our previous video on the 30-minute Power 3, 9:30 to 10 o'clock. So let's imagine 8:30 to 9:29/9 o'clock is accumulating. 9:30, looking for a turtle soup, being the end of the manipulation to catch the next distribution. So that's essentially how we can incorporate that, and it adds probability when we are playing in line with higher time frame structure with the clear drawn liquidity higher. And so essentially, now we'll get into a actual live chart example. So here we see price, and this is more of a actually Power 3 setup in reference to our daily Power 3. But again, these are very similar concepts, but they are not the same. Obviously, those in my private mentorship understands the time aspect of it all. I'm trying to not so much limit what I'm adding into the free YouTube, but more or less trying to make it put it in an easy way to understand. And then you guys can do your own research, own data collection to make it more, let's say, complex, more advanced. So essentially, market opens at 6 o'clock. We see our Asian accumulation. Following the accumulation, we want to see manipulation because price is engineering sell stops and buy stops. And then a underlying bullish market with a clear drawn liquidity higher. We want to see price manipulate down into a higher time frame PD ray, an old low, and specifically see SMT. So price manipulates down and running these sell stops, pairing those sell stops with buy positions, seeing a smart money reversal after seeing SMT at the previous day low, If you're confident enough to enter off this, this is a example of a turtle soup entry. You could have added a position here, stop loss at the low with SMT, and so on. For confirmation, which I suggest all you guys doing, is waiting for a clear buy model form, such as a classic 2022 buy model. So following that, we move into the distribution phase. Highest probability entry is going to be found after the first round of displacement on the 50-minute, which forms the MSS, change state delivery, and that is our high probability 2022 entry model. As seen here in this delivery, we have our Asian accumulation, London manipulation, SMT at the lows, and so on. And in the fractal viewpoint, I should have added an example here. I'm pretty sure I did, but I forgot to add it in the video that I'm recording right now. Essentially, when price retraces here into our entry, you can imagine that there is another AMD setup. Look up here. So this is from June 11th. Go back in your charts. Look, was there another AMD setup on this retracement down? That's something you can go study in your data collection. So that completes our AMD study. Now we're going to get into the Power 3 study. So we understand the pattern aspect of AMD. Now we're understanding the Power 3 aspect. So the open high low close and open low high close. That's what Power 3 is. It's a ICT concept that breaks down the range of a candle. That range is our open high low close and open low high close. It gives a time-based model and framework to hunt setups. So while AMD often sets up on a clear example, often sets up within our daily Power 3, within our daily candle, Power 3 can set up at any time, as again, it's a range of a candle. Every single candlestick is an open high low close, open low high close. Again, I don't want to overcomplicate it, but it's all very fractal. And within these Power 3 entry models, these time-based models, we're looking for higher time frame alignment. So essentially we're looking for, so let's say we're entering within a 4 Power 3 on a 1 minute time frame. Our first focus is going to be understanding where price is relative to our daily Power 3 on a 15-minute time frame. Understanding where we are within our weekly Power 3 on our 1 hour/4 hour time frame. And then again, then we get into our monthly Power 3, our quarterly Power 3. Again, I'm going to leave that for another video. As of now, I'm really only teaching that in depth in my private mentorship, but let's get back to it. So generally, we're looking to buy below the opening price in a bullish market and sell above opening price in a bearish market. And again, for this example, for these examples today, we're just going to be showing our open low high close, so our bullish examples. So you guys have seen this before. We see our classic, and this is within our classic daily Power 3s. Our highest probability daily Power 3s are going to be when we see Asian accumulation, London manipulation, New York distribution. Again, bearish candle, open, high, smart money reversal, low, close. Bullish candle, open, low, smart money reversal, high, low, or high, close. The best entries you can get is waiting for our open and then anticipating our smart money reversal. So similar to how there's only so many ways for the market to engineer liquidity, to recharge on liquidity, a little hint for something you guys need to start looking at for turtle soups, or just generally entering and getting a great entry. There's only so many ways that the market can reverse. There's only so many ways, only so many patterns you're going to see when the market's reversing. So I highly suggest go into your market, go into your chart, study. What do you see at every single reversal? What's consistent with them? Is it something you can catch? Something you should check out. So bullish market profile prior to daily open. We're looking for clear John liquidity above the market, being our potentially a previous day high, previous week high, or an old fair value gap, an old SIBI that needs to be traded into. Following the opening price, we're looking to buy. We're looking to long below opening price into discount levels. So again, we can reference what we just learned in our AMD, where we're looking at the left side of the market, looking to buy at significant points of price, being our previous day low, previous week low, an old BISI, and a bullish PDRA. With our previous day low and a previous week low, we're looking for SMT. And yeah, essentially what I just talked about. Again, there's only so many ways that the market is going to reach our John liquidity. Within our daily power 3, the classic pattern the algorithm makes is the AMD pattern. And then otherwise, sometimes we do see London session start the distribution and New York place continuation, but that's not going to be our focus for today. That's something you can look at within ICT daily profiles. So the example for today, I probably should have shown other examples, as it's not always as perfect as this. And I might actually go off script later in the video and show more examples, because every single AMD is a power 3, but not every single power 3 is an AMD. And that's something to really study, because not every single power 3, not every single 4-hour candle, not every single 1 hour, daily, weekly, and so on is going to be a classic AMD pattern. And I'll go through, actually, let me just, we'll do that later. I'm not even going to edit any of this, but we'll do that later. So, classically, Asian accumulation, London manipulation into an old higher time frame PDRA. Again, confirmation, we need to end the reversal, to initiate the reversal, to confirm the manipulation has ended. We need to identify first, has price reached a higher time frame PDRA, a significant point in price, as well as seeing SMT. If we do see that, then we are often anticipating displacement up at 930 and form a 15-minute buy model. This depends on news often, because sometimes we will see, often on Thursdays, if we have CPI on Wednesday, CPI manipulates. Often we'll see on Thursday, if we have PPI, PPI often starts the distribution at 8:30. And then we wait until 9:30/10 o'clock to retrace into that 15-minute buy model. But for this example, it's going to be 9:30. So again, SMT being a confirmation for reversal. So seeing SMT at our previous day low, previous week low, or if we're inside of a higher time frame PDRA, seeing SMT at our internal lows. So again, let's reference this as our 15-minute time frame within our daily power 3. So refer to the previous lesson on fractal AMD. Now we have fractal power 3. We understand that in order for a power 3 to play out, price will need to manipulate. So our key power 3s to pay attention to within our daily power 3 is our 4-hour power 3. And this is my highest probability model and the most easiest to understand. So let's reference here. So this is 9:30 opening. We display sub, form a 15-minute buy model. And let's just say that this is like 9:45. We retrace into that buy model, display sub again. Never mind. Spoke too soon. Okay, so imagine this is 9:30. 9:30 open, displaces out. Here, that's 10 o'clock. Apologies. So, we can see how our daily open, we accumulate, we manipulate, in order for our daily power 3 to play out, we need to see manipulation. We need to see SMT at the end of the manipulation. So same thing here. At 10 o'clock, a lot of people think this is when price reverses. This is all dependent on current market structure and what our daily power 3 is doing. Our highest probability trades are to come from 10 o'clock opening and playing continuation of our daily power 3. So if we do have an example like this, where 930 displaces, forms a 15-minute buy model, we're in a bullish market with clear drawn liquidity higher, what we want to look for at 10 o'clock is for price to manipulate down. Again, for this power 3 example, I was not trying to show accumulation, because often we're not going to accumulate. Often we're going to see 10 o'clock open, manipulate down into our half time frame PDI, which I don't have marked here, but would be a 15-minute BISI, 15-minute fair value gap. Within that 15-minute fair value gap, we're often going to see 1-minute SMT, followed by a 1-minute buy model. So that's our fractal point of view. Here is how we would map out the open, high, low, close. We have our open, low, high, and then of course our close within our 4 power 3. So this is our daily candle. Within our 4 power 3 would be a little bit smaller, and then potentially consider this to be 2 o'clock. 2 o'clock opens, manipulates down again, higher time frame PD array, finishes off at a drawn liquidity. So again, this is something I'm gonna dive deeper in future videos, but for lower time frame power 3s, we're always looking to play in continuation of our higher time frame power 3s. And yeah, so here's another example. I'm gonna show a few off, so I didn't add every single example I wanted to, but I have a few good ones outside of here. So here is a good example. We have our NASDAQ open, 6 o'clock, accumulation, London manipulation. Then here, like the example I was talking about, were Wednesday. So again, in a fractal point of view, so you can look back at this day, which was, actually don't know, it wasn't, whatever. Essentially, we were setting up a bullish weekly power 3. We saw Monday, Tuesday accumulate, Wednesday manipulated, and we're looking for a Thursday reversal. So PPI 830 displaced up, then 9 o'clock / 10 o'clock we're traced down into a higher time frame PD array, being our 15-minute unicorn, running up towards drawn liquidity higher. And then again, when I said 10 o'clock, 10 o'clock was here. 10 o'clock opening here. We're looking for a retracement into our higher time frame PD array. So 10 o'clock opens, manipulated down. This is a special kind of OTE. I'm not going to share that today. And this is also a trade we took in our live trading. So essentially, 10 o'clock opened, manipulated down, higher time frame PD array, play continuation of our daily power 3. I only took this, so it was about here to here. I could have held it a lot longer. I could have held towards drawn liquidity, but I was just simply targeting a low hanging fruit, which was still 80 points, which is not a small amount. Another example, market open, accumulates, I believe this is 930. Yeah, it looks like it. 930, manipulation, SMT at the current highs, displacement down. Actually, in this example, I probably should have showed something else, but in this example, we did not retrace into the immediate 15-minute SIBI. Nonetheless, utilizing standard deviation, retracement off -2 into 15-minute SIBI, down to 3.5 higher time frame PD array, march around liquidity. Another example, accumulation, daily open, accumulation, London manipulation, max expansion, SMT previous day low, displacement, retracement, higher time frame PDRA, continuation. We zoom in here. 10 o'clock was somewhere around here. We can only assume that 10 o'clock opens, traced into a higher time, manipulated it into a higher time frame PDRA, and then played continuation. So I'm gonna show some more examples in reference to this was one, but I didn't add all the charts. So let's go to here. So daily power 3, Asian open, or daily open, Asian accumulation, London manipulation, news / London manipulation. There was S&T, did the market. This placed up, 15-minute buy model. This was our lower time frame entry. So we're tracing into that 15-minute BISI, seeing SMT at those lows, displacement up, 1-minute buy model, and so on. So essentially, this is the type of stuff that we're looking for. And yeah, like I said, let me know if you guys like this kind of format, going through Google Slides. If you want the Notion templates, that's going to be in the description below on YouTube. So in my description, you'll find 2 Notion links, which links to the AMD lesson and the Power 3 lesson, and obviously the rest of my socials and so on. But this is a fairly simple lesson. It's just kind of clearing the fog when it comes to identifying the difference between AMD and Power 3. Yeah, like I said, fairly simple lesson. I'll do another one fairly shortly on, well, you'll see. You guys have a good one.